Good morning, Fractal Effects team. Fractal Trader here. Please make sure you read the disclosure before we get started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. We did have CPI news drop today. Tomorrow's PPI, so those are the 2 days that we avoid trading any US related assets. So we're looking at oil here on the left. US oil is the ticker. We are taking just kind of a watchful eye on NAS until we get another confirmation on one of our other assets. So oil, we are right across the board except for 1 minute. We have I believe, more of a contraction model. And more of a contraction model, usually what happens in a contraction model is the market likes to take out both sides. We have London highs intact right now. And then we have the daily low down here. The yellow lines, those are previous day's high and low. So we've already swept previous day's lows. And we have yet to get a confirmation. We are above the consequence encroachment of the New York fair value gap. We have London's fair value gap above us. We're below the 238. And the 1 minute is the only time frame currently that is green. Just waiting for our confirmation. NAS, again, we can take a look at this. Not interested in trading this asset today because of CPI news. That's one of the days we avoid. Remember, CPI, PPI, FOMC, anything related to the Fed chair. You want to stay out of the market. It's going to get too volatile. Here you can see this was the 8:30 move right here. That's when the actual news dropped. We got this big spike. And then the market filled it in and pushed down. Even though we are bullish on the higher time frames, we are red across the board. We've already swept London and Asia lows and highs. News swept the highs, and then the market dropped back down and swept the lows. Not an asset we're interested in trading today. We're just waiting for other confirmations. We have multiple alerts set up across Forex pairs, Bitcoin, oil, precious metals. So we'll see which confirmation hits us first, and we'll jump over to that chart. Bitcoin at all-time highs right now, 91,000. Keep in mind the same strategy works on Bitcoin as well. We actually, and we'll go over this perhaps the weekend or maybe at the end of this week, but the Saturday session for BTC USD, right here at the ticker BTC USD, that's Bitcoin against the US dollar. The Saturday sessions are very clean as far as how the strategy goes. We can show a few examples of that later. Sunday, I don't recommend trading anything, to be completely honest, even though I know that crypto is running 24 hours a day. Sunday is just not a good day. It's not a clean session for majority of assets that are available. Back to oil, again, we're at the consequence encroachment. We still have not gotten that confirmation on either side. Just waiting, but right across the board, contraction model. And we have already swept previous day's lows. Down here in the green, we have our daily low. And then up here, that's London highs. Those are pretty much the targets. Either we're going to sweep London highs, and in a contraction model, that's not completely impossible. Contraction model again, where we have a tight Asia range, and then London opens up. And usually New York likes to take both London highs and lows. But at the same time, we're extremely bearish. So we'd rather get a bearish confirmation. We've already got a V pattern here happening where we're already at the EMAs. So if we did get a bearish confirmation, it's all the way at the other side. We might not get a deep retracement, given the fact that we're on the other side of the consequence encroachment as well. Just patiently waiting and watching. No other alerts have gone off. And for anybody joining us late, because of CPI news, we are not interested in trading US related assets. We're concentrating on oil. And then as soon as we get an alert off of one of our foreign pairs or off of precious metals, we'll jump over there. That's what you want to do. You want to be watching not too many. You don't want to inundate yourself with all these assets. Find 2 or 3 that you like to trade, understand them, understand how their lot sizes work. Make sure you're comfortable knowing the movement, the pattern recognition of that specific pair or that specific asset, and just set your alerts. That way, as soon as an alert goes off, you can jump over there. We have students, for example, who only like trading the indices. So on days like today, CPI, PPI news tomorrow, they don't trade at all. They just take those days off, sleep in, etc. You also don't want to overtrade. At the beginning, you're only looking for 1 successful trade a week. 1 successful trade, aiming for 1 to 3 risk to reward. That'll give you 12% at the end of the month. It's a better return than you're going to get anywhere. So again, we're on the other side of the consequence encroachment of the New York fair value gap. London's fair value gap just above us. Because of the contraction model, I'm going to drop in a fib all the way from London high down to New York low. London's fair value gap sitting right between the golden zone, 61 and 71%. So we could shoot up here and then shoot back down. So we might get a bullish confirmation, get rejection off of this, and then the bigger move and the longer move of the day might just be a push down to take out the daily lows here in the green. That's what we're patiently waiting and watching. Still green on the 1 minute. So we've had a crossover. No other alerts have gone off. Make sure you check us out on Instagram. As mentioned before, we're always posting educational material over there. Going over, we're going to start posting kind of our plays of the week, the best setups that we see. And then also you can see, I believe it was a post either your beginning of this week or Friday, but we went over the specific days that you should avoid trading, or at least avoid trading US assets. You can always take a look at oil. US oil is always kind of a safe haven, doesn't get affected too much by US news. The only real news you have to watch out for is crude oil inventories, which I believe is later this week. And make sure you have some kind of an economic news calendar so you know when these news days are. We use Forex Factory, but you can use anything. Red folders, those are the main ones. For example, whatever asset you're trading, if you're trading Forex, you like trading the Australian dollar against the US dollar, make sure you know when that Australian news drops. Given the time difference, you want to make sure you're not trading, for example, in the evening when all of a sudden news drop is going to happen. Make sure you set alerts. What I've found, especially nowadays with technology, if it wasn't for the alerts that we are privy to on our phones, I personally would miss a lot of entries. I'd miss a lot of sessions even. Sometimes you want to make sure that you get those alerts to let you know, hey, session has begun, confirmation that that we've broken to one side. And even like send yourself notes early in the morning. Like have a note that goes off. For example, you're not good at meditating. Have a note that goes off right in the morning that lets you know, meditate before. You'd be surprised. Our attention spans have dropped off. It's not what it used to be. People do forget little things. They do forget, oh yeah, I got to meditate before I get started. Maybe have a cup of water. Stay hydrated. There's literally medical reports that show you that being hydrated and being dehydrated, the effects on the brain. Your memory does slip. Your reaction time does slip. Be prepared. It's no different than somebody stretching before the gym or an athlete getting ready before a game. Still waiting for that confirmation. We haven't broken to either side. So even if we get a bullish confirmation today on oil, I want to see what it does up here. I want to see if we turn around here and fall back into the zone before 11:30. Because we're still red across the board. Might want to do a deeper retracement here. And this is more of an advanced entry, keep in mind. This is stuff that's in the Learning Hub on fractaleffects.com. And even though on YouTube we stick to the basic strategy, today we're going to kind of open that up. We're going to see if it actually comes up, taps this area, and then see what kind of reaction we get here. anybody joining us late, again, NAS over here on the right. We're not trading any US related assets. We're not trading any indices today because of CPI news. But we're just keeping an eye on it. Red across the board, so it'd be a counter trend. Higher time frame, 4-hour daily, we're green. And keep in mind how the strategy works. Like the daily session, or sorry, the daily bias, the 4-hour, the daily, that's your trend. But if you have 1, 5, and 15 minute all lining up, and it matches the actual model, your range model, then you can actually take a counter trend trade. Today, of course, being CPI, we're avoiding any indices altogether. Tomorrow's PPI, so we won't be trading indices tomorrow either. We'll continue to look at oil, and if any of our foreign pairs are off pairs, like Euro GBP, GBP JPY, those Forex pairs, if we get a confirmation over there, we'll jump over onto those charts. Oil pushing up now, might give us a bullish confirmation on this candle close. Just short of it. This candle right here, that's our current high, that wick. So even if we get a bullish confirmation, we are not interested in taking a buy. We're more interested in seeing what the market does up here. This is an advanced entry and an advanced concept that we teach on Fractal Effects in the Learning Hub, but today we're just going to monitor it. There's 3 advanced entries and a couple of advanced concepts that we teach. We're just going to keep an eye on this one for now. I want to see what it does up here. If we get a lot of gesticulation, rejection off the 238, and our 5-minute stays red, then I'd be interested. Keep in mind, we couldn't even take this buy. We'd have to wait for the 5 and the 15 to turn green. It's the only way you can even take a counter trend trade. I'd rather see it tap up here, but stay red on the 5 and the 15. That would give me a better indication that this thing wants to fall through, and then I would use the bottom of the range right here as my TP, all the way from here to here. Obviously taking partials along the way, but still patiently waiting. We got about 2 minutes, 38 seconds left on this candle. Let's see if this confirmation sticks, and then we'll continue to monitor it. NAS still just stuck down there. NAS is actually delivered to the majority of its levels. It's already swept out Asia and London lows. I believe we even hit a 4-hour fair value gap down here, or at least close to. Now it's just gesticulating inside of the New York fair value gap. We're red across the board. No confirmation as of yet, but most likely this will be, if we get a bearish confirmation, we're pushing down. But again, avoiding this altogether. A true contraction model, if you can see. Contraction model is where you have a tight range during the Asia session, and then it opens up during London. And then both sides are swept. London highs, London lows. Now we're literally at the midpoint. So whichever way you get the confirmation, I'm more leaning towards obviously a bearish confirmation. And we're just using NAS to do technical analysis just to kind of show you guys how the strategy and the indicator work, but we are not interested in trading this asset today because of CPI. Oil on the other side, 46 seconds before this candle closes. Let's see if we get this bullish confirmation, which would be a counter trend. We always have people that ask those questions of specifically like, what if we do get a bullish confirmation, but everything else was telling me that this thing was going to go down? And that's where, again, those advanced concepts come in. Because there is a way to trade it. There's even an early entry model that we've created before you even get the confirmation. But these are all advanced concepts, and your probabilities are decreased. And you have to practice till you understand it inside and out. You have full pattern recognition. You can take just a quick look at it and know exactly what's happening. You take a quick look at the higher time frame EMAs, the expansion model, box color, confirmation, you know exactly what's happening. So our bullish confirmation stuck, but instead of taking a counter trend, we're not taking a buy because our 5 and our 15 are red. I want to see what it does here at 61% and 71%, the golden zone. I want to see if it rejects off of the 238 and if we push down. Our goal is to find a high probability trade setup 1 hour after range formation. So that puts us close to 11:30 Eastern Standard, New York time. Make sure you guys change, regardless of what time zone you're in, make sure you change the time zones of your charts down here. So you're on the same time. You want to be on New York Eastern Standard. About 9 minutes away from 11. So you're taking a fib from London high down to New York low. I want to see what happens right here. Either we're going to push through using this fair value gap consequence encroachment to push us up, or we're going to reject from here and then come back into the range to go take out these lows. Our bias is still bearish, even though we got a bullish confirmation. Keep in mind, today we are going over an advanced concept. If we were trading just the regular concept, the regular strategy, we would actually not be interested in this setup, as this would be a counter trend, but we are not even green on the 5 and the 15. In order to do a counter trend, you got to be your 1, your 5, and your 15 have to match up. Especially given the expansion model that we have, we're more interested in finding a sell. We're close now, 61%, between 61 and 71%. There's our London fair value gap, 238. This is a key zone. I want to see what happens here. If we start rejecting one candle, we want to see at least a couple candles reject here, then we'll drop down. Regardless of what asset you're looking at, you want to make sure you're looking at it on the 1, the 5, and the 15. Have your chart set up in a way where you can see all 3 time frames. Getting that rejection we haven't quite touched. Make sure you zoom in, you know exactly what's going on. Just short of the consequence encroachment and just short of the 238, but right at 61% and 71%. I do not want to see a candle close above this range between here and here and continue to push up. Candle body, I should say. And then on a smaller time frame, we want to see confluence that this thing actually wants to start pushing back down. Watching US oil here on the left. We have NAS on the right, even though we're not interested in trading NAS. As you can see, look how sloppy this is. This is just a lot of consolidation. So right after New York Open dropped this, it's just been sitting here, right inside the New York Fair Value Gap. We got one candle rejection from that area, but we're still waiting. This thing's still pushing up. So if we push past this, push past the golden zone, 71%, we have a candle close up here, and our 5 and our 15 turn green. We're not interested in taking a counter trend today. I want to see this thing reject this zone and push down. But I want to see the confluence there first. We haven't even touched the 238 yet. We haven't touched the midpoint of the London Fair Value Gap. We're getting a push down now. There's a fair value gap forming here. I want to see if it sticks. "36 seconds left. Still just patiently waiting. Making another swipe up. Back at 61%. I want to see it tap that 238 and bounce off the midpoint of this fair value gap right off this zone. Then I want to see confluence on other time frames. That's what we're waiting for. We're at 11 o'clock. Just short of it. I want to see one more. 2 minutes, 22 seconds left. That is our third candle closing in this area. I'd still be interested. I would like to see it tap this. That would just increase our probabilities that it wants to push down. But right now, there's a lot of gesticulation happening in this fair value gap. But until I see either the market tap that zone that we're looking at, I'll close well below this. But ideally, I want to see it go up first a little bit more. Let's see. Still just patiently waiting. Now this is where these advanced concepts can either pay out or, again, decrease your probability of getting into the perfect trade, because we already have a bullish confirmation. Remember, there's an 80% chance once you get a confirmation to either side that you're not going to break the other side. We're not looking to break the other side, but there's enough room from here for our retracement to take us back down here and get a 1 to 3. So if we get in here, this is where we'd be aiming for, to take out those lows. We're close now. close to tapping that 238 in the midpoint. Keep in mind we're looking at US oil. We're getting confirmation on GBP, NZD. That's the Great British Pound against the New Zealand dollar. I'm just going to switch the NAS over while we're still looking at oil. Just want to take a look at what these conditions look like. Green across the board, bullish confirmation. More of a nested model. We've taken out the lows, high. Excuse me, 1 second. It's already at 0.5 standard deviation. British pound against the New Zealand dollar. We're just taking a look at this. This was the next alert that went off. We're still concentrating on oil. A lot of gesticulation here. Again, we're in the golden zone. Now on the 5-minute, we want to stay below the 238. This is where I'd like to see a rejection happening and a sell-off of oil. If we do see that, but I want to see again once the rejection happens, once we figure out exactly which candle we're going to be taking it off of. This is just kind of a rough idea. So we'd like to see more rejection here. I don't want to see a single candle body close above 238. So now we're testing it. Still no rejection as of yet. 38 seconds. If this candle body closes above the 238 without the next one forcefully coming through back down, this thing might just want to push up. And if it does, keep in mind it's had no pullback after confirmation, so it's not like we could have played it on both sides. We're still red on the 5 and the 15. Not interesting for a buy. There's no entry for a buy. There's only interest in a sell right now. 7 seconds. Let's see what happens on the next candle if we push down. Right at that golden zone now, at the edge of it, 71%. See what kind of reaction we get. Tap the 71%. Now if this thing keeps going higher again, we're out. We're not interested in a buy. On GBP NZD, that's the Great British Pound against the New Zealand dollar, we have a bullish confirmation. We're green across the board. Let's see if we get a retracement here. That's the earliest fair value gap that I'd be interested in. And see if it meets our 20 EMA, bounces off and heads for 1 standard deviation. We're only at 11.11. Still got time to find that high probability trade setup. Just move this out of the way. So let's see where this candle body closes in the next 3 minutes. We're going to get rejection and push down. 2 minutes 33 seconds left. GBP NZD slowly starting to make that move. That's a nice wick. I don't want it to stay up here too long. We don't want to see this candle close up here and then another one. Then it's using the midpoint of the London fair value gap to continue up, which again would be a counter trend. That's 5 and 15 are still red. Still nothing of interest. GBP NZD. We're waiting for the 20 EMA to meet us right here in this fair value gap. Let's see what that looks like. Make sure you're looking at the same ticker as your broker. So as soon as you tap up here, you want to add it to your watch list. As soon as you put in the ticker, you're going to see an option of all the different brokers on the right hand side. Make sure you line it up with your broker so you have the right price, the right spread. That's a good wick. 47 seconds. Let's see if this thing wants to push down from here now. Now I want to see it get below the consequence encroachment, the midpoint of the fair value gap. Keep in mind that the indicator points out or paints out the midpoint as well. You can see it right there in the red line. We want to get below that red line. We want to make sure all of our confluence lines up on all time frames, 1, 5, 15. So we had one candle close above the 238 and above the midpoint of the London fair value gap. On the 5-minute, we are close to getting a crossover, but we don't want to see that happen. We don't want to see a crossover on the 5 or the 15. I'd rather ride this rejection down back to the New York fair value gap. Let's see what happens. Continuing to push up still. Keep in mind it's given us no entry either for a buy. We couldn't have taken a buy or a counter trend unless the 5 and the 15 were green, and it never really retraced back to, here's our confirmation. Here was the first fair value gap. No retracement happened. Still driving up higher. We are getting these candle rejections though, these wicks. We don't want to see it get too high. It keeps wicking from here and then starts pushing down. We want to get under that 238, under the midpoint of the London fair value gap, and then keep driving down. Still nothing of interest. GBP, NZD, nothing yet. We're now at 79%. Still driving. Getting a wick now. 31 seconds left in this candle close. Let's see how high it goes before it turns around and pushes back down. And if this thing just keeps driving up, we didn't really miss out. Never gave us an entry here. So we've swept these highs now, these relative equal highs. Might want to just gather more liquidity to push down, or again, if it just continues pushing up, then that's fine. GBP NZD still has not come back into our fair value gap of interest, has not tapped our 20, so no real retracement. Now that it's taken out these relative equal highs, we don't want to see it push up any further. If it hits 100%, we're out. We're done looking at this market. GBP NZD, still waiting for a tap. We're getting close to a crossover here on the 5M. So if this turns green, and this thing just keeps driving up, we'll most likely just take out London highs. And never really gave us a true retracement for entry, which is fine. We're already at 1.5 standard deviations as well of that same extension. Getting a wick there now. 1 minute, 15 seconds left, the candle close. So it's now officially swept all these highs. Twenty seconds left. That's the first red candle we've seen in a while, so I want to see if it pushes down from here. We've swept these relative equal highs. We're still in the golden zone, 79%. Now let's see if it gives us confluence on our other time frames. It actually creates a foothold for us to actually enter. With GBP NZD, we're getting some reaction off of this fair value gap. Now this is completely outside of our range. So once we get confirmation, there's a high probability that we're going to enter our range, or at least touch the dealing range, the top of the dealing range right here, the gray line. So we've had no touch of any key zones yet. So if this is just a quick pull into this fair value gap and then push up, as mentioned before, you can't feel bad about that. You can't get FOMO because it never entered or hit any of our levels. Here now, the market having a tough time getting past this zone. Let's see if this is truly a rejection or if it just wants to continue up from here. Could just be engineering new liquidity, people going short from here after taking out these equal relative highs, people going long from down here, anticipating that it's going to continue up. This late in the game, we'd have to see a lot of confluence on our other time frames. We want to see displacement, which is a big candle pushing down. We only got about 3 minutes left in our stream, but let's see. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Please check us out on Instagram, fractal.effects, where we're always dropping educational material. And we'll be dropping more videos of actual plays and trades and doing a little bit more market analysis. And please hit the subscribe button, turn on your notifications so you know when we're live. Please hit that like button if you've learned something today. Two minutes left. Still getting that rejection. This thing might not want to move until later. Since this is an advanced concept that we went over, we will definitely be concluding at 11:30. When you're going into these advanced concepts, then you have to stick to the rules. If you're not in a high probability trade setup 1 hour after the range formation, which is 11:30, then you're done for the day. Especially when we're talking about these advanced concepts that go against the actual strategy. It's the last candle, 41 seconds left. Nothing interesting on a smaller time frame yet. No footholds have been created, just gesticulation. We can't even be interested until it gets below the 238 now. 238, the midpoint of this London fair value gap. We're already at 1.5 standard deviations. And we're bouncing off the weekly range right here, that aqua line. I'm not mistaken, I believe that's the bottom of the weekly range. Maybe the top is hidden here somewhere. Okay, we're getting that rejection now. On a smaller time frame, we do have a foothold that is appearing, but $10. I want to see if this gets below and starts pushing down. Back at the 238, the consequence encroachment of the fair value gap. I'm not interested in taking a sell, but I'm going to wait for this candle to close. Just want to see where this candle is. Remember, stick to your rules. Capital preservation first and foremost. Sometimes the best trade is the one you didn't get into. This went a lot higher than I would have liked it. The 5 has already turned green. And we're still above the 238 and the consequence encroachment of London fair value gap. We'd have to get below this. I do think this thing wants to push down, but this late in the game, not really all that interested. Plus, hasn't gone below our point yet. And yet the fair value gap that it's got to tap is above here. So it'd have to first pull back up, tap our fair value gap, then we'd have to push, but we don't want that. We already want to be below the 238 when the push happens. This is where the probabilities are decreased. 1 minute, 40 seconds left. We'll conclude there. We'll be live again tomorrow. Keep in mind, tomorrow is PPI. So we will be doing most likely something similar to today, just looking at oil and waiting for certain other offset assets to confirm. Getting a rejection off of that 238, off the consequence encroachment. 1 minute left. On a smaller time frame, we are entering that fair value gap. This is where the push would happen if we were going to push down, but I don't like the fact that we're still above the 238. $15 seconds left. And we will conclude the session there.